Good afternoon, everybody. Forgot to turn on my microphone. Good afternoon, everybody. Hey, hey. All right. Let's get started with the disclosure. I'm live on YouTube. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. Certainly have gotten quite a bit lighter. Got hedged at one point today, got shaken out of it. Otherwise, I would have kept it, I think. But let's look at our charts. All right, so, I mean, I feel like I've been saying this a lot lately, but it's kind of continued to be true. Oh, we got Rivian out. Oh, Rivian trading up. It kind of continues to be true. I mean, we just totally nailed it in the morning meeting today. Big shout out to the team. You know, really a team effort here. You know, so many of you guys are contributing in so many ways. It's awesome. Um, and, you know, like I said in the morning meeting, Pat's morning note, which is just such an excellent note and should really be part of everybody's research. It just kind of hit the nail on the head. Am I saying that right? As far as what my thought process is for this market, where we're at, and I actually want to bring that note back up because it really just stated it so perfectly. Just to kind of recap the morning meeting here a little bit. So, like, the way I feel about the market coming into today is that this rally is getting um, it's getting a little much, right? This rally's come very far in a very short period of time. We've retraced 50% or so of the down move from the S&P. And going back over here to kind of Pat's morning note, the information that he's providing in here is exactly what my thought process is on the Fed. And the CPI number and the PPI number coming in light, obviously that's a great start to bringing down inflation, but it is just the beginning of a start. It's one report that came in light. We are far away from 2% inflation. And that's what the Fed has been saying. You know, I also said in the morning meeting, and I think it's true, I've said it a few times, I think this year, like what the Fed seems to want more than anything else is the market to not go up because that is going to, not help them with the inflation argument. But they don't want the market going down too much either, I don't think, because they're trying to create this soft landing. They don't want a massive recession. I'm sure they would rather have a recession than have, continued high inflation, but they're really trying to navigate this fine line where whenever the market starts getting up too much, the comments become significantly more hawkish. Whenever the market is getting absolutely destroyed, they come out and they seem significantly more supportive. And you had Kashkari, and you had one of the other voting members of the Fed basically come out yesterday and just re-emphasize, like, we're not talking about bringing interest rates back down. We're not really talking about a pivot. If you're betting on a market pivot, it's too soon to even talk about that. And again, the comments to that guy at the Wall Street Journal that they leaked things to in that quiet period about the Fed, likely to want further evidence of inflation slowdown. So we're just seeing all of this information, all this data now coming out where the Fed is like, hey, market participants, relax. This rally here is too much. Like, we want this market to not be going up this much. But a lot of market movements, as we've spoken about consistently, are related to market dynamics. And the market dynamics starting probably really going back to, like, honestly May or June, but there, especially in mid-July, everybody's short, everybody's in cash, nobody's long, everybody's hedged, and we were just ripe for a massive bear market rally. We've had it happen. Going back here to mid-July with how we reacted on the June, CPI and PPI numbers that were bad, and the market was able to hold in. That led to this rally. Buying leads to more buying. And now we're at an area here where I think a lot of the short covering rally aspect of the rally is done, and it's just a question: do longs actually start having FOMO and start really coming into the market? And again, so that's like the downside. I think at this point is you're basically, I mean, the last line in Pat's note to pull it back up here summed it up perfectly. Um, Bottom line, if you're betting on additional upside from here, you're fighting the Fed. Good luck. Yet at the same time as we're looking at all that information, the market dynamic information from Goldman here on this part of Pat's note, it also perfectly sums up the ability of this market to continue to go higher. I mean, there's a lot of market participants that are out there who are just pulling their hair out right now on the degree of the rally. They don't understand how could the market be up or, arguably in a recession. Things are looking so bad in a lot of different aspects of the economy. And it's the simple fact that the way the market works, the way trends work, is that buying leads to more buying and selling leads to more selling. I mean, we looked at those numbers like a week or so ago that basically said, well, if the market goes sideways, there's going to be basically forced buying from a lot of the funds that are out there. And if the market goes up, that will actually even create the need for even more buying as you have these systematic flows that continue to come in. So, the highlighted line here in Pat's note, 7.4 billion worth of CTA demand every day this week, 5.5 billion worth of U.S. corporate demand every day this week. There's another $13 billion worth of demand that accelerates to the upside in a flat market tape with low liquidity. So that's the market dynamic information that can bring us up. So coming into today's trading session, I'm just very cautious at this point on new longs. I'm very cautious at this point on new longs. Yet, a little gun shy on shorting the market because of that market dynamic information that buying can lead to more buying. The PPI number came out, that's light, and this market's breaking through resistance levels. We're above 420. It's just you gotta be careful. You gotta be very careful shorting because you could easily have been short for a lot of this rally to the upside. Hopefully, none of us are. And just pulling your hair out, trying to make sense of it all. We've just hit a point here where the rally is so big that I'm like, all right, like I just feel like it's becoming too much. So I've been focused on kind of selling out on some of these longs that have just treated me extremely well over the course of the last month, and then being patient and looking for shorts. What I said in the morning meeting today was that today's really only a day two. We broke out kind of yesterday above 415, closed at 420. Now we're above 420 pre-market. So it's really only a potential day two. I would love to be shorting in an ideal universe, like in the upper 420s for the spies as we're starting to approach 430, and be doing that tomorrow. Meaning have like one final strong day today, leading to like a blow off top type situation tomorrow, where you could start looking at honestly probably being aggressive to the short side if that situation were to happen. That would be my ideal world. My ideal world and ideal trading setup, unfortunately, happens a minority of the time because the market doesn't like to make things so easy. Every once in a while it does. I still remember the day of the Russian invasion when we had 4 massive down days in a row because the market was pricing in the invasion, and then that morning we just had this huge gap down to 410 in the spies. This was one of the biggest layup days I can remember. So alongside where right at the open we were all coming in aggressive buying, got super paid off of that. So I still remember that very clearly. But most of the time, my like perfect layup situation that I'm really looking for doesn't actually take place. And it looks like today is maybe that example. Though we were, because of the team, actually able to continue to kind of get out of our longs a little bit and at pretty much at highs, short. So coming into today, we wanted to see, because we were a little bit extended pre-market because of the gap up, how that gap gets satisfied. And basically what I laid out was, you have your price correction, you have your time correction like we had yesterday, But if there is a case where we just rip up off the open and this extended market becomes even more extended, then I'll probably look to begin to short and begin to hedge perhaps a little bit more aggressively. And that was the situation that occurred pretty much. And we did also actually have some fantastic opening longs because at the same time as I'm saying, hey, this market is really starting to get ahead of itself, I think, and we can start paying attention to shorts into some of these areas if we really continue higher and get extended. There was still a potential today of a big squeeze again in some of these names. So it was like we had a lot of these growth stocks on the radar, like not a lot, but some specific ones with some specific levels or ones that had news or upgrades or whatever for longs off the open, and some of them paid like really really well. And at the same time, we're looking for the shorts to potentially come in. So I before I get into the market short, some of the longs that we discussed, one was Shopify. Shopify through 42.50. Again, just as a pure momentum trade, if things look right. I actually said, I don't remember if it was in the morning meeting or right as I ended the morning meeting and came back on the radio, but I was like, oh, I'm cheating. I'm not waiting for the market to open. So I was actually able to buy. I think I bought like 42.40 something, even right before 42.40, and then before the market even actually opened, I was selling stock at 43. I was like, oh man, you probably might have missed this now if you didn't just cheat like I just did. But it gave you one quick additional shot of being able to get stock on this quick pullback to 42.50. I actually bought my stock back. I don't know if anybody else was really catching this trade. It sounds like a few of you guys were in it with me. They did make the opening execution just very difficult because it was trading right at that 42.50. I think at like 9:28 and 9:30 comes around, and the actual opening print was 42.92. It's just a much more difficult buy. But if anybody was able to give this fantastic momentum move here off the open before 100% fading out and totally failing, I actually liquidated my position at $45 today, which some of you guys know is probably unlike me. I usually like to always let that last piece ride, whatever. But it went back to kind of where the market was. It went back to that other thought process in the market. So it's like, all right, I can catch this, like momentum trade here in Shopify, and there's a bunch of others that work like this also. And at the same time, I can say on this one, you know what? I think I'm just going to take the money and run on this at $45 here because of the degree of the move with the market coming into a spot where I'm feeling very uncomfortable. Even though that tends to be, again, not how I usually trade. It was just kind of the circumstance of the moment that came in there. And I did trade it back and forth a little bit on the way down. I actually gave back a few bucks on that trade on the way down here, but it was fine. And then the big call out, and the one that I'm super upset about missing, and this was another crazy one how it came back, was DNA through $3.30. Right, they had some sort of partnership deal come in. This $3.30 was just a very clear and obvious resistance level on the daily chart. So we called out for the long there. I just got so tied up in Shopify and a bunch of other names that I was in that were running and I had to manage. That by the time I was able to type this up, it broke through 330. And I was like, oh man, it was at like $3.37. I was like, oh, I really don't want to chase even 7 cents up in a $3 stock. So I actually threw a bid out at $3.32. I think I said as I threw the bid out, you guys, if you caught it, are going to hope that I don't get filled because it's going to mean that you'll have a lower probability of success because the best trades that are out there never give you a second chance of getting stock. And the market for DNA actually pulled back, put me as inside bid at $3.32. I think it even printed some bids at $3.32. It just didn't print me. And then it was just gone. Just totally gone. So just a fantastic trade here for 10 cents risk through $3.30, and squeezes all the way up to $4.86 in a very small period of time. Just a fantastic squeeze in this stock. So we had that going on. I know energy was something we were also looking at for relative strength. I think a few of you guys caught some energy trades. So we're catching some great kind of opening trades here, recognizing the potential of relative strength to come into energy names because of the data that came out on oil consumption expectations, whatever, increasing by however much it was, that helped give relative strength towards XLE, and helped oil be strong here. So we're able to capture these great longs by finding squeezes, by finding where the relative strength is, and at the same time able to be cautious about the market. Able to tell pretty quickly some of these FANG stocks in particular, which are also very extended, just were not trading right this morning. Apple was one that ended up kind of being strong and giving a little bit of an upside grind. But look at how this Microsoft was trading. Microsoft was just trading, very poorly. Amazon, which I guess eventually broke its opening high. Amazon at the beginning of the day, you got the market from the second bar on, just like having upside momentum, and Amazon just, for the most part, not really participating. Google, not really participating, right? The market was acting much stronger than it was. So it's kind of like, I feel like both sides of that story that we discussed in the morning meeting, coming off of Pat's note about how I can feel like this market is probably extended itself on this rally, and I would look for it to come back down, can happen, and at the same time those squeezes can also happen, and long money can also be made. And again, just going back to the morning meeting, the scenario I laid out was in a further squeeze type situation. We could start going up right away in the beginning of the day. Normally when you have a gap up, I don't remember what percentage it was, around 1%, depending on which index you're looking at, maybe a little bit under 1%. But these bigger gap ups, they need time, and especially you got the short-term tactical sentiment indicator back in that red zone. What have we seen every time that the market has given continuation where short-term tactical was in the red zone? That happened on this day, that happened on this day, that happened on this day, that happened on this day. On all 4 of those days where we had solid green closing candles at the end of the day, but at the open, short-term tactical was in the red zone. Every single one of those days I just referred to where that's happened in recent memory, you needed a very long price and time correction in the beginning of the day. Anywhere from an hour till noon before our opening highs then kind of break and the market would go into an upside grind and we'd be able to get upside continuation. Yet here we are today with the market kind of where it is, and short-term tactical back in that red zone, and after one little 5-minute red bar, we just took off here. We're not even riding the ADMA on the 5-minute. We're not even touching the ADMA on the 5-minute. This is like an accelerated upward channel on the market, that then is getting even bigger at highs. This type of price movement really just cannot be sustained. Now, I was originally thinking, and I was originally looking at, I wanted to start looking at Q short in the 331 to 332 area. That was my original thought process. And 2 of you guys, Mark and somebody else, mentioned, hey, there is actual daily resistance, probably going back to these pivots, daily resistance at 330.29. So again, this is once again just a shout out to the team. All I'm doing in my trading is utilizing the information that the team is getting into our systems to facilitate my own trading success. The information that Pat provided, and then again, the call outs that you guys kind of had here, that call out on the QQQ resistance. And originally I was like, I want to wait till 331, 332 to start shorting. And then you guys were like, hey, well, there's resistance at, 330.29 that we should pay attention to. And I said to myself, all right, you know what? I'm going to look to start building into a short early. And I was going to build in and give myself room, honestly, potentially all the way up to 335 on a build in. But what I do when I'm doing that is I start small, I'll build in. I don't mind letting that, especially this type of trade when we're extended, go against me, because it is also acting as a hedge. I do still, even though my longs are greatly reduced from where they are, I do still have longs on. I'm going to make money as the market moves up. But I'll start building into the short, kind of into this area. Instead of waiting for 331, 332, I'll take the information that you guys are providing. I'll start closer to 330. And then if I get a signal, I'll get heavier. So that's exactly what I did. I did it with the T triple Q basically as my trading vehicle. But all I'm looking at is I'm looking at the levels. I'm looking at the extension. I started just by shorting on the way up, which is what I always say not to do. But for me, that's just kind of a feeler. I'm planning on really building into that. And then on this bar here, I cheated a little bit. So my signal here is basically what's called a king queen top. A king queen top on a 5 minute chart will also will typically look like a shooting star on a 15 minute. And this is not a perfect looking shooting star, but you can see the upside tail here on the 15 minute as we kind of came back down. So basically, uh, one thing that we got to remember when we're thinking about like chart patterns and especially candlestick analysis patterns is the fact that bars have a, I don't know if random is the right word, but for the purposes of what I'm going to say right now, we can say random. Like bars, what I'm trying to say is like candlestick bars almost have like a random closing time, right? Like if you could, and this is part of the reason why people use multiple time frames of charts too, right? Like if you probably look at if you look at a 5 minute green bar that closes on highs, followed by a 5 minute red bar that completely negates it. If you combine these two candles, it's a shooting star. So if you have like a 10-minute candle, maybe you'd be looking at like a 10-minute shooting star. So another name for that, they call it a king queen reversal, is when you've got the big green bar followed by the big red bar that basically entirely negates it. So if you could combine these two candles here, what would you be looking at? You'd be looking at a candle that's got a smaller downside body and a bigger upside tail, which again, it's a shooting star. What is a shooting star? Is it a topping signal? Yeah, people call it that. I don't like calling tops and bottoms. I call it a retracement signal. A retracement signal to where? A retracement signal to equilibrium area. But I'm not looking at the market in a vacuum on a 5 minute chart. I'm looking at everything that we discussed. I'm looking at that information that I'm kind of talking about, which is more like thesis type stuff when it comes to the Fed. But I'm looking at this degree of upside extension that we have in the marketplace as it's coming into 330, which is a huge resistance area. And I'm like, yeah, this 5 minute chart pattern is telling me that I could get a pullback to, I don't know, well, maybe even only 329, maybe 328.50. When I look at it with the daily chart, I remember one of you guys asked me when I was still short, hey, what's a target I could have on my short? I just said 320 because that's a very reasonable target to have. I mean, you could come up with others. You could say yesterday's low. That's a reasonable target that you can have for yourself. You could say the gap fill at that point, right? We're still all the way up here. The gap fill could be a target that you could have for yourself. But if you're looking for an initial reach target on a short, 320. Market could easily pull back to the 80 MA on the daily chart and still be bullish on smaller intermediate time frames, right? That just satisfies upside extension. So I'm kind of looking at all those things. I start to build in, and I start to see the markets coming down like this. And this is where the cheat came in a little bit. Technically what you should do, like when you're looking at any candlestick analysis, if you're looking at a hammer, if you're looking at a shooting star, or in this case like a king queen top type pattern, what you're supposed to do is wait for the candles to actually close, so confirmation that it closed with the pattern that you're looking at. For myself though, or even you could have added to your short on the break of this green candle as like a little bit of confirmation. I didn't even wait for that. While it was still within the range of this one, I felt confident that we were going to end up with this type of candle on this bar, because another layer of probability on the side of my thought process is the time of day in combination with the extension. Remember, it's 10:15, 10:20 here. Usually between 10:15 and 10:30 is really when your 15-minute charts and 15-minute time frame extension becomes more important than 5 minute. Yet here we are at 10:15, massively extended the upside on a 5 minute chart, right? We just ripped higher. We had that opening momentum that I was talking about earlier, which would incline me to potentially start shorting earlier, because it's almost like that upside capitulation that we were talking about, where an extended market can become even more extended. So that's basically the thought process here. Coming in and cheating, recognizing this extension on the 5 minute, let alone the 15 minute, and getting heavier than on the way down. So I did initially begin to short lightly on the way up, which is not something I usually advise, unless you can afford to have a game plan like I was, where I was going to build in for $5 on a short if I had to on the cues, while waiting for a signal to get heavier. And then here I felt was the signal, was able to kind of get heavier on that, and then covered some, right away to get the risk covered more, into the 80 EMA area on the 5 minute chart, covered more into the 21 EMA on the 5 minute chart, and then I left on 25% of my position with the idea of I'm going to trail and I'm going to hold this, and I think I could get a move down to 320. The mistake that I made was honestly that I probably trailed a little bit too tight. Um, I started to look at this market in here, particularly this candle right in here, where I'm looking at an H pattern on a smaller time frame on a 5 minute chart into a gap fill, and we know gap fills do tend to act as some sort of support. And as we got to this area and we didn't break down further on this candle and have trend continuation, I said to myself, you know what? This market has been very strong here. Originally, I thought 330 was a little bit early, but we were extended, so I just want to tighten this thing up and make sure that I, can make money for myself on this trade also. And I ended up getting shaken out because of how tight I was trailing it. Even though it technically meets the standards of my trailing rules, I'm trading T triple Q. I raised my stop to, or lowered my stop to this high right here, and I got shaken out, right here. You can see it on the T triple Q chart. This high here was $36.89. I lowered my stop to $36.89. The high right here, I'll put this to the penny. What time is this? 1:15. Oh no, I got shaken out. Huh. Whatever. I got shaken out on the high of this bar. So I guess it wasn't just to the penny. Went a few more pennies higher. I got shaken out at 36.89. I did put in a high at 36.93, and then I missed the downward move on the rest of the sell off into the close. And I'll be honest, I'm a little annoyed at myself for doing that, kicking myself a little bit, because at the end of the day here, I think the market closed like trash. And a lot of these stocks, a lot of those same opening upside momentum stocks that made for great opening upside trades close like trash and are giving pretty trash looking daily candles that potentially signal that we might pull back further. And pulling back further would make sense. Going back to the daily chart here, um, even with this kind of afternoon sell-off, I mean, on a percentage basis, we're like not even down. SPYs are up 1.17%. Qs are down 0.4%. IWM is up 0.6%. That's after hours numbers, so might be a little bit of a change from where we closed. But these SPYs here, they could easily work their way back to 415. We're still $5-6 extended on this, and 415 is where we just broke out of this consolidation pattern. We could pull back. If you want to you could make a bull argument and say that you could still make money to the short side on a pullback to 415. Maybe we find support of previous resistance and bounce and kind of work our way back up. So it looks to me like this market wants to price correct a little bit further as of today's close, especially when you start looking at some of the individual stocks that are out there and what they look like at the end of the day. So again, kicking myself a little bit after hours here. Hindsight's obviously 2020 for being as tight as I was on my trail on the Qs and not having any of that for overnight. But it was still, to give myself some credit, it was still, I think, a really good call out after such a big move to basically be able to nail the top. But it wasn't just, again, it was a team effort. It wasn't necessarily, I probably wouldn't have taken that trade that early if it wasn't for Mark and the one other person who mentioned that, important daily level up there and kind of convinced me to start a little earlier and then get a little heavier when the signal kind of came in there. So yeah, overall, I think that this was once again, as a shout out to the team, just a fantastic trading session with just how well we're able to navigate the complex information that's out there that could make the market go higher, could make the market go lower, and in this case, made the market go higher up the open and then made it go lower for the rest of the day, and how well we were able to navigate both sides of that thought process and trade both sides of that thought process from the beginning of the day with the opening longs and the relative strength and the momentum stocks, to saying, hey, you know what, I'm just going to book my money and run on some of these things. And as a matter of fact, I want to start shorting the market based on all this other information that we're looking at. So just a great job there. That's all I got. I do have a 5 o'clock cutoff today because I have a meeting, but I'm happy to answer as many questions as you guys got until I got to go. So let me scroll up here into the virtual trading floor and see if I missed anything. First thing I think I'm seeing here is from Austin. Was there an ideal entry in CRVN? CRVN. Someone else said this name today, and I tried to type it up during the day, and I didn't get any data on this. Is this an OTC stock or something? Anyone got any information for me on the CRVN? Someone had mentioned it during the day, and I'm not getting any symbol for it. If it's OTC, I can't see it. I won't be able to give you any feedback. CVNA. Oh yeah, CVNA. This was another call out from the meeting. Along with Shopify and DNA, we called out CVNA through 50. And I mean, that was your trade. It was a decent amount of risk. Actually, no, it was not a lot of risk at all. This is another one. 16 cents risk here. This is a pure momentum trade, which I think kind of all these were with where we were gapping up. But we discussed in the morning meeting today that this had this big day here on August 5th, has rested for 3 days. It's kind of created $50 as a level, and you can see a next level of the squeeze if these types of stocks are squeezing through 50. I also mentioned in the morning meeting that EDMA on the daily is at 42. $8 of extension to $50 stock is generally not going to be something I want to be involved in unless it's a pure momentum squeeze trade, which is exactly what we're looking for in this name. So you could have taken the trade through $50 at the open and had 16 cents risk. You also could have taken the inside 5 and up. If you're using the inside 5 low, maybe you're getting shaken out on this tail. If you're giving it to the low of the day, that would have worked also. It's the same thing here. Look at this insane momentum move. This is exactly what we were looking for. $7.30 move off of 16 cents risk off the open as a pure straight up momentum trade before totally failing and fading out. And this is what I'm talking about. There are a lot of daily candles out there for a lot of stocks that are going to look just like this. This Carvana is saying to me for going forward, like, don't go back to this wall right now. The only way that I would consider going back to this after today is if this high gets broken. So basically the market needs to prove itself to me by breaking this high. Otherwise, this thing's going to be off my radar and out of play, I think, until it's able to reset itself up. And honestly, curious to see, I'm assuming that a pullback will come in off of this. I'm curious to see what that pullback looks like, particularly in a company that I think is this garbage. Shopify, on the other hand, I don't really think is a garbage company, but it's also had a push through failure on resistance and came back down. So I'm curious to see on like a Shopify where I think it's a better company. $40 is a little bit of a level also. It's not extended at all on the daily chart, whereas Carvana is extended on the daily chart. If this thing is going to have a deeper pullback or not, I'm inclined to think based on the market and based on how a bunch of these things failed that we're due for a pullback in some of these stocks. But I'm also like, I don't really see the Shopify testing this $30 support again, to be totally honest with you guys. I think that like this base that this stock and a lot of these other names created here is something that is going to be sustained. I think that this stock obviously got very ahead of itself when it was $177, and now it's split also. But at 30, I think that there's this is, we've talked about with these types of stocks that are super beaten up, coming up with a list of the ones that have a path to profitability or could be, accretive to another company to buy out. I got Shopify on that list. So whereas, Carvana, I wouldn't be totally surprised if one day I'm seeing this thing, in these mid-20s or $20 again. And that's what I'm curious to see the degree to which this pullback happens. If you're bullish, you cannot see the low of this Maribozu get lost. Whereas Shopify, I struggle to see this trading at $30 again. Yet they're still kind of trading all those names together. So we'll see. I apologize. I'm just going off on talking to these stocks without even actually answering your question. You wanted in, but you were too gun shy to enter. You just watched it rip. Was I too passive? I don't know if you were. I just keep typing up, what is it, CVNA? I don't know if you, I don't think you necessarily were too passive. Um, this is just these pure momentum trades. I don't think are necessarily right for everybody. There's a lot of reasons I could point to not be involved in this. That extension on the daily chart, the extension even on the 5 minute chart from the way that it was gapping off. Like, this is a very much a pure momentum trade where you are looking for a specific thing to occur, which is a short squeeze. And that's the only thing that justifies you buying this high, buying this degree of extension. And with those other reasons to not take the trade, if you're being passive because you're staring down those reasons, I can't fault you for that. I mean, again, it turned out to being a fantastic risk reward. So if you understood the trade, you'd be like, all right, 16 cents risk here to see if I can get a squeeze is going to be worth it. I think it can happen. But I can't fault you for not being involved in it. I think it's better. I'll say one thing more matter of fact. It's better to have missed this trade entirely than to be buying like on this bar at 10 a.m. and say, oh my god, I can't believe I missed the $50 buy and it's ripping, and you just chasing at 53, $3 after this thing has moved because it's squeezing, and you've got no reason for it except, hey, I'm got FOMO for missing this trade that I game planned on. Now I'm getting in late. Like, you don't want to. Heck, you even could have bought it at $54 and made money in this thing. That would be a horrible job, because that's not going to make you money in the long run. And that's all we care about, right? Is doing actions in regard to the market that can create consistent profitability. From Jackie here, can you please go over your T-triple-V short? Cool, did that already, and how you executed the trade and placed your stop. Also, what grade would you give this trade, and can you go over some layers of probability behind it? Sure. So I think I went into that already in significant detail. So if you have any other clarifying questions, I'm happy to do it. The only thing I didn't talk about was the stop. So I can add a little bit of extra information for you there. My original trade where I was shorting on the way up lightly, I had a game plan to be shorting all the way up to, and I'm trading the T-triple-Q, but I'm really looking at the Qs, building in and all the way up to 335. The ad where I got heavier, I'm just giving to highs. So yeah. From Chinggis here, for inside day and up setup, when the price is breaking that level intraday, and if the game plan is to look for execution on the small time frame, with the setup considered to be an inside 5 or flag pattern, does the price action have to consolidate and give that setup above the level, or is it okay to be below the inside day high level? Sure. So always best if we have concrete examples that we can look at, but otherwise I could just kind of answer your question broadly. So the inside day and up setup is basically a daily trade setup. So it's off of a daily chart, obviously. We're talking about inside days here. And whenever we're trading any inside bar situation, whether it's an inside day or an inside 5 or an inside 15, the only reason that we're taking that trade is we're utilizing it as an execution setup for when you like other things. Because I promise, if you trade every inside day or inside 5 or inside 15 that you find in the market, you will be a consistent loser in the long run if you trade them all. So we only take that setup when we like other things, like if we're looking for trend continuation or momentum continuation. That's a great example of when you utilize an inside bar setup for execution. So that's the first thing I would say there. And the right proper way to do it is to buy the break of the inside bar and give it as your stop loss to the low of the inside bar, or possibly, if it's trend continuation, the previous pivot low on the time frame in which you're looking at. Now, when we're talking about daily candles, a lot of times the risk reward won't make sense to just buy the break of an inside day high and give it to the low of the inside day high. And especially, and this is what you're alluding to here with your question, when you go back to what I try to do in markets, which is oftentimes I'm trying to look for daily chart reward with 5 or 15 minute chart risk. that gives me the best possible risk reward ratios, and that's why I don't even look at. I don't look at or think about 3 to 1, 4 to 1, 5 to 1, 10 to 1. I don't even think about risk reward ratios like that when I'm entering trades. I think about the risk, and I'm looking at daily chart reward. Therefore, I know that the risk reward is going to be positive in such a way that if this trade were to work out perfectly, that I'm going to make a fantastic risk reward. I mean, even if you go back to the T triple Q trade here, what am I getting in on that ad for? On this trade, maybe like 13 cents risk or something like that. Yet on the daily chart, I could be looking for a move if it's just T triple Q. What was I saying with Qs? 320. So if it's T triple Q, I could be looking for a move down to $35 or below $35. So again, intraday risk possibility, and it's not going to happen all the time. It's going to actually happen a very minority amount of the time, but you don't need it to happen all the time just because of how outstanding the risk reward becomes. I'm looking at 13 cents risk or so at $38 with the possibility of a move down to 35 or below. So $3 or so worth of reward on 15 cents worth of risk. Like those risk rewards are always going to work out. So we want to be able to find, like you're saying, that execution in small time frame. I like the idea of just buying through the inside day high, and then finding an appropriate stop loss that's on the small time frame. And that's not going to be an ignition bar because it's not technically a breakout, so I can't use the bar in which it breaks. But I could use some sort of pivot low that was coming in on a 5 or 15 minute, um, uh, or maybe an opening low if it's going early in the day, like just low of the day type of situation as an appropriate stop loss. Now, another thing that I'll do is I use the daily chart as a layer of probability. So if the stock already broke the inside day high, and for whatever reason I'm not in it, and now it's setting up with a flag pattern like what you're describing, that's a trade that I like also. Because my daily chart is a layer of probability. I know, because I'm looking at this daily chart, the daily chart's telling me that this stock should probably be going higher because it just had my inside day and up, which is for a trend or momentum continuation. And now I've got a 5-minute bull flag that I can, execute that on. I don't like the idea too often, rarely, I'm not going to say never, of taking the chart pattern below the inside day because now I don't have the confirmation. When it's above the inside day, like I'm saying, that daily chart is a layer of probability in my favor of the small time frame execution. If it's still below it, I don't have that confirmation. I don't have that layer of probability on my side. So what I'd be doing if I was taking it below the inside day high is I'd be doing a cheat, which I cheat sometimes on stocks, right? On execution. I just described how I did it with T triple Q. I cheated on. I didn't wait for the bar to close. I cheated on it because I had an expectation for the reasons I described that bar would close the way that it eventually did. Um, so yeah. So if I'm buying a flag pattern below the inside day high, I'm cheating under the assumption that flag pattern is going to be the catalyst that breaks the inside day high. And I will do that once in a while. You just got to be very careful. Additionally, from Chinggis, additionally on that inside day and up setup, what if the price intraday pokes below yesterday's low? That negates it. It's gone. It's out the window. And then works its way up to the inside day high. Is that a setup shot? Does that the same probability of success? I try to keep my trading simple. If the inside day or inside bar broke down and now it's breaking up, it's usually a no trade for me. It negates the setup. From DJ here, what percentage of your trades do you consider to be A plus? A very low percentage. Also, after you close your half position at 1-to-1, do you have a price target down to an exact cent where you want to trim, or more so a target area where you want to trim at your own discretion? All of the above, if that's possible. So let me, I guess, retrace here. What percentage of my trades do I consider to be A plus? I don't know the percentage. I don't keep that statistic. I can tell you that it's very low, like very low. And an A plus trade to me is when like the stars and the moon and the sun are like the whole world's lined up for me on this trade. and the risk reward is excellent. You might see an A+ trade once a month, something like that. Of every trade you take the entire month, maybe one of them becomes like a true A+ type of setup. So that's the answer to that question. As far as targets after 1-to-1, so it depends. Is the trade counter trend or is the trade with the trend? If the trade is counter trend, then I've absolutely got price targets to book more profit. I get the risk covered on even T triple Q. That's counter trend on that time frame, right? So you can see my execution. This is very simple, right? This is me shorting. This is me covering my risk. This is me. I was maybe a little bit greedy past the 80 EMA. This is me at the 21 EMA, and this is me getting stopped out when this high breaks. That was a very simple trade as far as execution goes. It's just kind of following a simple game plan there. So counter trend trades, yeah, for sure. With trend trades, it gets a little bit more complicated for me. I guess sometimes if I'm very heavy, sometimes I like to do that cash flow stuff around core positions. I do a lot of, which means that I incrementally sell stock a lot in order to rebuy it, and that's very formulaic in how I do it. A lot of the times, if I'm not that heavy, then it's going to tend to be more trailing and less targets on with trend trades. Yeah, it's going to tend to be more trailing and less targets, but probably a combination of both. It really heavily comes down to, at least for me, the size I have in the trade. If I'm light, if I'm heavy, or if I'm somewhere in between. If I'm light, then it's trailing almost entirely. If I'm very heavy, it's trailing. It's taking some off at targets. It's taking some off incrementally with the purpose of rebuying it and trying to build cash flow for myself. If it is in between, then it's maybe I've got a couple targets where I'm taking off some extra stock on the way up just to make sure I have a winner combined with trailing. Can you submit another distribution form? What's today's date? Due by the second Friday of the month. Yeah, I mean, what I would do is, I would submit one full distribution form and just let accounting know that it's updated. Like, hey, please ignore the last one I sent. I made a bunch more money. I want to take out more. Here is the updated distribution form. But you can just, like, that type of stuff. Just you can email me about. 3x Apple ETF going to start trading today. I really dislike. They're just making everything into an ETF now. It's supposed to be in a meeting in 2 minutes. From Alex, any general advice for setting stops and managing risk for us rookies with relatively small accounts and relatively low cents and dollar risk tolerance? I mean, my general advice is that you always need to use the right stop. You have to use the right stop for the trade. So what that might mean for someone who has a smaller account or a newer trader or whatever is that a lot of trades that you look at might not be right for you and you shouldn't take them. You're better off not taking the trade than using the wrong stop. Trades that you take, you got to use the right stop. A good thing, there's plenty of trades out there, like even today, right? DNA, 10 cents risk. Carvana, 16 cents risk. Like, very tradable for anybody, regardless of if you got, $25,000 in account or $2 million in account. You can take it, or even smaller. But the big thing I would say to you is it's very important to always use the right stop for the trade. If you start saying like, oh, I can't afford to trade this one properly, so I'm just going to put my stop here, you're asking to lose money on trades that work. From Ramon, how far back do you consider support resistance levels? For example, if you look at support resistance from 2019 2020, so all the way back, I'll look at a support or resistance level from 2010. I'll look at support and resistance level from the financial crisis, but I think that there's a recency effect on support and resistance. So I'll look back for as far as they exist, but I'm going to put more credence on a more recently formed level because it's going to have greater price memory than a level that was formed years ago or decades ago. Yeah, Roku is another one. Like, there's so many of these candles here. Classic case of making money both ways if you can watch the technicals and change your outlook. That's the hard part. I've always struggled with flipping stock. Felipe, who I know hasn't been able to spend as much time with us, is really good at it. He'll go from long to short to short to long and like nail both sides of the trade. I've always struggled with the mental aspect of, hey, I'm long this thing because I'm loving this long and believing this long trade to, ooh, it changed and not only am I going to get out of the long, but I'm flipping my mentality to actually take a short trade that's here. So I've always struggled with that. I think it's very hard. I don't even, man, this move was insane. And I'm got to cut this short because I got to jump into this meeting. I don't see a fantastic short signal here, just eyeballing it, to be totally honest with you. In here maybe, but that's an aggressive trade. This looks very hard to me, this shorting at the top, though you have the upside volume capitulation coming in. If this candle was more of a shooting star, I'd be very excited about it. It was the 15. Yeah, you have it on the 15. So you could have traded off this tail based on the 15. That's the short signal up there. Otherwise tricky. Coin was another one. Yeah, coin was weak early too, which is a signal to potentially go after that. Peloton Interactive lawsuit on inflated size of its library of fitness classes. Peloton down after hours on that? No. From Hemming. I'm shorting the Qs at 150 based on the 5-minute chart. Okay. When should I close the position? What's the best signal? I mean, you're shorting you with the trend here. I would close it when the market closes if you don't want to keep it overnight. Or if you feel even have profit cushion, I would be swinging that. Honestly, you know, if you're with the trend, in this case, you're with the very small time frame trend. Let it run for you as much as possible. That's the signal I'm looking for. Let it go until it can't go anymore. So, just got to give you a quick short answer on that because I'm late for a meeting now. So, hope everyone had a good job, a good trading day today. Good opportunity out there today. Team, you guys rock. You know, again, like I was saying earlier, like it's not, and I say it all the time, this is not the Derrick VTF, even though I'm the one who does the meetings here. It's we're a team, and you guys as a team are providing some awesome information in here. You're helping me be more successful. You're helping me make money. I hope I'm helping you guys make money and be more successful. So let's keep it up. Have a great night. See you all tomorrow.